Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a magnificent Monday. Today we're going to be getting into our daily cryptocurrency market update, and we've got quite a lot to discuss, really setting out the week ahead of us. We know that we had some pretty harsh sell pressure for the cryptocurrency market on Friday and Saturday night, pretty severe. However, since Sunday, I think Bitcoin is up around about 14%. So we have seen some of that sell pressure get clawed back, some of that downside get clawed back. For me, it's kind of obvious if we get a relief rally here that is a relief rally, given where the stock market currently is. But the real focus on my mind is the economy right now, and how is Bitcoin and crypto going to fare in a recession? And I do think a recession is somewhat inevitable, despite Janet Yellen saying that it isn't inevitable, and then going on to say that inflation is unacceptably high, and this may be the reason that we go into a recession. But we're going to get into that in this video, also going over a number of different articles, a number of different news segments. And there is a vested interest in keeping Bitcoin above 20K. The miners are one, and there's a number of other interests, like people having to get liquidated and a number of other things in keeping Bitcoin's price above 20K. So we're going to get into all that. Let's start by looking at the overall market. It's green across the board, guys, but it's kind of a full sense of security given just how down everything is. We're trying to maintain a reasonable bias, what would the right word be? A realistic bias on the fact that I think, the economy generally is looking like it's going to, or is already starting to land on its arse. And I think this continues, but we'll get into the stock market in just a minute. So Bitcoin over the weekend saw some significant sell pressure. You are clawing that back up, or you are clawing your way into some of that. And you are actually now consolidating above 20K, which is key that we stay above there after reaching 17K, because it's staying above the prior all-time highs for Bitcoin. And also, you can see you did have on the way up an area of consolidation here, which is a key level of significance, which you are now consolidating, seem to have found some support off of, and looking to continue to the upside. So it's very, very significant that Bitcoin is back above these levels, and it's going to be probably very much range driven now, and you're going to end up in some sort of a range like this. It's going to be very trader driven. But ultimately, there is definitely still the scope for upside this week. The issue that you have is, do you then form a structure similar to the one that we previously did here, or in fact, the one that we did over here, which we know led to more downside. You do not want to bet against the trend in terms of a swing trade position. However, there definitely is the scope for upside, and we'd previously spoken, and one reason we're so cautious on crypto at the moment is because we don't know how it's going to fare in a recession. We had actually looked, if we go back to the weekly for the NASDAQ, we'll get all this off, just how you react typically around your 200 weekly moving average. This is typically a bounce point. In a kind of bull market, this will hold you, and essentially markets have just been in a bull, certainly the equity market, really since 2008. But now I do believe this is going to be more of a prolonged down period where we don't have the same conditions behind us as what we had from 2008 onwards. The conditions have very much changed and in fact reversed, but it is likely that we do see some sort of bounce here. We've done other analysis on what happens in a recession and what sort of how you'll interact with this 200 weekly moving average. It will hold typically. You'll get some sort of relief before reality kicks in, and that of course is in the form of a recession. Same thing in the dot-com boom. We'd actually looked at how similar market structure was for the equity market from the 1990s all the way up to the peak. Very similar to what we've just gone through. And I think all the risk is still very much to the downside, even if there is short-term upside. So that's why we're maintaining a cautious and very much majority cash USDC position at the moment. Here's some really interesting comments from Yellen. US recession isn't inevitable, but inflation is unacceptably high, Treasury Secretary Yellen says. The recession that many Americans fear is coming is not at all imminent, Treasury Secretary Yellen says, or told ABC News on Sunday. Talk of recession has accelerated this year as inflation remains high and the Federal Reserve takes aggressive steps to counter. On Wednesday, the Fed announced 75 basis point interest rate hike. Its largest since 1994. The last time they did a 75 basis interest rate hike, the IMF had to bail out Mexico. So they are going to break something. I don't think that there's really much positive news given the kind of monetary regime that we're in for markets over the next 3 or so months. However, like we say, there is reasons why we may get a bounce here. And the equity market may really support this if it does react and see that upside or relief rally on the 200 weekly moving average moving into a recession like we've seen previously. So it's really going to be a key thing to watch is what does Bitcoin do now? You know, does it do a similar thing to over here and previously over here, or set up similar structure to any of these sort of periods of relief or rest before that continuation to the downside? You know, it's going to be a very much a waiting game in terms of not calling this a bottom. You know, we're not calling this a bottom. And I think, again, still a lot of downside risk with everything going on. Let's get into a little bit of the news. Celsius says it needs more time to recover financial positions. We know the story with Celsius. We had 3 Hours Capital, Alabama, talking about Alameda, sorry. We've got an article here from Cointelegraph. Sam Bankman-Fried and Alameda step in to prevent crypto collapse. Essentially saying that Sam Bankman-Fried and Alameda Research have essentially helped other companies out there to sort of stay afloat during these turbulent time periods. The question really is, okay, well, if we do get another down leg, are they going to be able to do the same thing? And one thing that has really been revealed to us during this down leg is, or this market, is really just how leveraged everybody is and how we're seeing landmines pop up everywhere in the crypto space, certainly with your VC funds and your sort of crypto banking services like Celsius. This is from Checkmate. Bitcoin price bounces perfectly off the difficulty regression model at 17,600. This reflects the best estimates all-in sustaining costs to mine Bitcoin. Bitcoin's return to test its cost of production, as all commodities do in bears. So the issue that you've got here is, if you look at how it actually reacted with it over here, you do end up typically going down. And we've spoken about how miners are essentially, you know, getting into a dangerous territory where the amount of electricity used to mine a Bitcoin may not, or may be more than the actual sale of that Bitcoin. So they may become unprofitable. And I think this is going to be a growing issue that we need to watch, certainly if Bitcoin's price remains low. Because the thing is, when the tide sort of comes out, you really see who's been swimming in the sea naked. And we're seeing a lot of naked people out there, guys. Let's get on to the next little bit of news. This is from Marathon Digital. Keeps on mining despite Bitcoin price slump. Early this month, Marathon said it has been accumulating or hodling its Bitcoin since September 2020 as of June 2022. The firm held approximately 9,000 Bitcoin. You know, this is what I mean. You've got lots of landmines out there. I mean, imagine if that sell pressure hit the market because they had to. But that's not been confirmed. You know, they're very much saying that they're going to continue despite the price action. We had some news from SoLend, which I believe is a borrowing and lending protocol on Solana, that essentially they had put a proposal forward to essentially freeze Whale's account to stop them from liquidating and causing a cascade of liquidations that would obviously affect the Solana blockchain. Very questionable when DeFi gained the powers to, I mean, really, when you think about DeFi, decentralized finance, it's the move away from centralized finance. It's not really DeFi if you can act as a centralized dictator, you know, and basically freeze accounts. I mean, DeFi has had a really bad rap over the past 3 months, given everything that we've seen unfold, whether that be the Luna situation, which has actually caused a lot more pain than I think people pay attention to, given just how many, you know, 3 Hours Capital were a huge casualty of Luna. And there's a number of other VCs out there that have suffered big time and that have had a trickle or a knock-on effect on the rest of the market. But this is, you know, DeFi is having a really bad rap. You know, it just goes to show just how early we are in the DeFi space. I'm a believer in DeFi. I think hopefully the future is decentralized finance, and we see some sort of emerge with CeFi linking into the DeFi world. Certainly when we talk about emerging nations, you know, there's a huge market share to be had there, and a very exciting time ahead. So again, looking at this week moving forwards, it's really what Bitcoin does now that's going to be key. Yes, we have reclaimed 20K, but do we hold it? There are landmines everywhere, like I say, that could cause, we don't know what the catalyst for the next down leg is going to be, if there even is one. But this is still very much a downtrend, and a severe one at that. But you have short-term found support, and there is definitely reason. Certainly we're watching inflation You look at nat gas has had an absolute spiller. Oil is slightly coming off. We're going to be watching the open of the US 10-year government bond yields. It's having a bit of a rest, but does that see higher prices? You know, if we get commodities rest and pull back, and we get the likes of the DXY have a bit of a break, DXY is doing very, very well, struggling to make a new high, then this may all support and move to the upside for Bitcoin. The issue that we've got is it a move to the upside? Do you potentially do something like this? Come back into this range, deviate, and then we get that continuation to the downside. That's very much a possibility, and we are still biased that this market sees lower prices before we get higher ones. That's all I've got for you in this video, guys. If you've enjoyed the content, a like is always appreciated, so is a comment, and I'll catch you all in the next YouTube video. Thanks a lot for watching, guys.